After watching this video, you will know exactly what liquidity is and how you can use it to find much better trades. So in my opinion, understanding liquidity is crucial to becoming profitable, because this is what made a big difference for me. When I started understanding liquidity and how to place my trades according to the liquidity being taken out, I saw a dramatic increase in my results, and I noticed that I had a much better understanding of what is going on in my chart. Because if you're now trading and you're using support and resistance or trend lines, you are likely being stopped out a lot of times. And understanding liquidity makes a big difference, because then you understand why you are stopped out and why is price constantly looking for your stop loss. So first of all, what is liquidity? Well, liquidity is basically considered as the collection of stop losses from the retail traders. So the collection of stop losses from retail traders that price will look for. And why is price looking for this liquidity and these stop losses? Well, because this is where the banks and the institutions place their orders. And an important rule to keep in mind is for every buyer, there needs to be a seller. And for every seller, there needs to be a buyer. So if the banks want to buy at a certain point, then there also needs to be a seller at that point. And that is most likely the stop loss. Because basically, if you place a buy order with a sell stop loss, you're obviously selling when your stop loss is hit. So when the banks want to buy, they are looking for sell stops. And I will show you some examples to make it more clearly to you. However, just understand that for every buyer, there needs to be a seller. And the banks actually need this liquidity. They need your stop loss, because otherwise they cannot fill their entry. Because if no one wants to sell at that point, then they cannot buy. So they want the liquidity, they want the market to be liquid enough to fill their orders. So the best rule to find liquidity is simply thinking about where do people place their stop loss. So we will be covering where most people place their stop losses and where the most liquidity is placed. By the way, if you're new to the channel, my name is Alan and I've been trading for multiple years, and now I help people to get consistently profitable. And I don't sell a course, all of my videos are completely for free, so you can watch them and make your own strategy and become profitable. However, if you still struggle to get consistently profitable, at the end of the video I will explain how I can help you with getting profitable. So watch till the end of the video. So it's important to understand that there are multiple kinds of liquidity. And I consider 3 types of liquidity to be the most convenient ones to be looking for. So the first of the liquidity types is high and low liquidity. So you're just looking for a low or a high that's very clearly defined, and that's almost like this pivot point where a lot of stop losses are stacked up under this low. Because these lows and highs are very obvious points that most retail traders are looking at. So the most retail traders are looking at this low and they place their entry somewhere like this, and they place their stop loss below the low. So you automatically know that if this is a clear defined low, that there's a lot of stop losses sitting below that low. And that's where all the liquidity is, and that's what price will be looking for. Because unfortunately, price will not do this, go down, hit the entry, and then go up. But price will actually look for the liquidity, because this is where the real buying power is. This is where the banks and the institutions are placing their orders, and this is where most retail traders are stopped out. So this is where the liquidity is being taken out, and then price moves upwards. So the more obvious the high or the low is, the more liquidity there is below or above that high or low. And here are some examples. So like you can see, and by the way, the time frame does not matter. You can do this on any time frame. This is a clear defined low. This is a very obvious low being formed here. So this is what most of the retail traders will be looking at. They probably place their entry somewhere in this area. And as you can see, it respects this zone, because this is a demand zone and it respects the zone. However, later on, it sweeps the liquidity. So it takes out the liquidity sitting below this low, because that's where the stop losses are. So if you made your analysis and you simply look for these pivotal highs and lows, these clear and obvious highs and lows, then you know that there's liquidity sitting there, and then you can wait for the liquidity to be taken out, And now you can actually look for an entry. And this is another example. So when we look at this high, again, this is a very high point here. It's very obvious. This is an obvious high that people are looking at. People are not looking at this high. They are looking at this high. This is the highest point in this whole area. So later on, you can see that price takes out the liquidity. And therefore, it hit all of the stop losses that were sitting up here. It filled the entries, the sell entries of the banks and the institutions, and then it went down. So the other type of liquidity that you want to be looking for is trendline liquidity. So if you're familiar with trend lines, basically a lot of people trade like this. They are spotting the trend, they see an uptrend, and they draw in lines at the highs of the trend like this. So they make their trend line like this and a trend line like this. And they want to buy at the trend line. So they want to buy here because they think, well, we are in this trend, we are in this channel, and it will probably bounce off this trend line again. Well, wrong. It can work, but it will likely look for the liquidity. So if you see a trend line being formed, it's very likely that price will go down, take out the liquidity, and then go up. And that's why we don't trade trend lines, because I think they are just not consistently getting you results, and you are likely to be stopped out because it creates a lot of liquidity. And this is exactly what the banks know. The banks know that there's a lot of liquidity here, that you place your order here. So they stop you out and they take out all of the liquidity that's been built up by the trendline traders. So an example of this would be here, for example. So you see this trend line, it builds an uptrend. So you're building this small uptrend here. And people expect price to again hit the trend line and then go up. And you see that it hit the trend line. However, after that, it just completely went through the trend line, took out all of the liquidity here. And this is exactly what happens very often. So it takes out the liquidity, and then after taking out all of the liquidity, all of the stop losses, then it goes up. And the last example, and this is one of the most important examples, this is what you will see very often, and you can place really good trades based on this type of liquidity, is support and resistance liquidity. So you're looking for a support or a resistance level, and you can spot this by looking for relative equal lows or relative equal highs. So as you can see, price formed a low here, a low at the same point, and then again another low. So it built this support level. And they don't have to be exactly at the same level. They have to be relatively equal. So relative equal lows will form liquidity because this will form a support level. People will look at this and think, whoa, a support level. I will place my entry here and my stop loss here. Well, price will therefore look for those stop losses, take out all the liquidity that's below this relative equal low level, and then move up. So a really good example that I actually placed a trade on as well is this. So you see that it forms this resistance level, and you can almost draw in this whole zone. So price rejects at this level, then it creates another high here. You can see it stumbles upon this level multiple times. So it really creates a resistance level, a very strong resistance level. And therefore, this is where people place their entries, and their stop losses are sitting above these relative equal highs. Therefore, price moves through the liquidity, takes out the liquidity, takes out the stop losses here, and then it moves down. So now you might think, how can you then use this for your own trades, and how can you find trades? Well, if you see liquidity being formed in the form of trend lines or support and resistance, or a very clear high or low, then you simply wait for liquidity to be taken out like this. So price moving through the liquidity, taking it out, then forming a break of structure so that price actually goes the opposite direction. We can also call this a displacement. So a displacement in the opposite direction, because that indicates that price is responding to the liquidity, that it took out the liquidity and now wants to move further. So we see it takes out liquidity, creates a displacement in the opposite direction, and this creates opportunity. Oh shit. And this creates the opportunity for possible trades. So you can find multiple trades. This is the 5 minute. You can even zoom into the 1 minute. But for example, I see this fair value gap being created. You could be in a short trade here. I see another fair value gap here. I even see a fair value gap here as well. And this is a very tiny small fair value gap. There's one here as well. And if you're not familiar with fair value gaps, that's basically what we most of the times use for our entries. So you can watch the video about fair value gaps as well. But this just shows you that when you wait for liquidity to be taken out and then look for a trade after seeing a displacement, then you can find multiple trades. So you had 5 times where you could be in a short trade. So to summarize it, you want to look for liquidity, so either a low or high, or support or resistance, or a trend line, and you wait for this liquidity to be taken out. After it's taken out, then you look for your entry. So really quick before we end the video, if you struggle to get consistently profitable, then you can send me a DM on Instagram @AlanTheTrader, because I can help you get profitable with my profit program. And you can become profitable in a matter of months instead of multiple years like most traders do. So thanks for watching the video, and I will see you next time.